Hi, this is Larry McMillan with a stock market update on Monday, May 3rd before the market opens. Well, S&P index hasn't really gone anywhere since April 16th. The market had a strong run from late March up through mid-April, and it's digesting that move right now, mostly just by going sideways, which is generally a positive thing. S&P is staying above its rising 20-day moving average, and it's above all the important support levels. There's a minor support level now at 4180 because several of the daily ranges in the last week or so have bottomed out in that area. Then there's support at 4120, 4000, and then 3870. So the chart is positive, and since that is the case, we are still retaining our core bullish position. The equity-only put-call ratios, however, are slipping just a little. I mean, they're still on buy signals, but there's been some pretty heavy put buying the last couple of days, and that's indicated that they're curling up a little bit, but still, at this point, still on buy signals. We introduced a new indicator in our Option Strategist newsletter last week. I think I had mentioned we were going to do some research on it. And that is the number of standard deviations that SPX is above its 200-day moving average. Right now it's 16. That's significant. Some serious market tops have occurred when that has gotten to 16 or even higher. We really need to wait for it to pull back from there, though. We don't want to jump in front of a freight train. For example, in January of 2018, it went all the way to 35. So jumping in at 16 would not have been a great idea. The breadth of the market has slipped recently, and we have breadth oscillator sell signals at the moment. I say at the moment because the market is up this morning, the futures market is up this morning. We'll have to see if those breadth oscillator sell signals remain in place throughout the rest of the day. The VIX has stayed in a tight range between 17 and 19 pretty much for a whole month now. It's probed up towards 20 a couple of times, but hasn't been able to get up there on a closing basis. If VIX were to close above 20, that would be a somewhat negative situation because that could indicate VIX is starting to trend higher, and an upward trending VIX is negative for stocks. So right now, VIX is still in a sideways to downward trend, and it's not a problem yet. The construct of volatility derivatives also remains positive. The VIX futures are trading at a premium, actually fairly large premium to VIX, and the term structure slopes upwards. So all in all, we're still retaining a core bullish position. We will trade confirmed sell signals around that bullish position, but as long as the S&P chart trends higher and stays above support, the bullish position is justified. I invite you to visit our website, take a look at our newsletters. Subscribers have access to the research that I said we just published about the number of standard deviations above the 200-day moving average. And I think you'll find our newsletters profitable as well in your trading. So thanks for listening, and have a good week trading.